Alright, this is take two. You guys don't get to see take one, but you guys wanted me to spam YouTube. Here it is, so hopefully you guys enjoy it. It's kind of like Twitter, but just on YouTube. Jax, keep it down. Jax doesn't enjoy it. But if you guys are new, so if you are new videos every day. I'm trying to post like 20 or 80 in a day, actually, is the goal, or something like that. We have a lot of cool stuff on this channel. You should probably go check it out. But I want to talk about actually one of the biggest myths with trading options or buying a call. And I'm going to show you guys on something I played recently. Well, just right now, it went up, which is cool, but that's not what I want to highlight. One, I am going to give you a play. However, there's many things to notice about this play that teach you a lot about options. One, what happened, the big myth I want to discuss, as well as why this is both a good play and a bad play. So stuff you guys could paper trade with, you want to gamble with, you know, do your thing. But anyways, the big myth I want to discuss is that if you buy, you know, pretty much, I saw this on Robinhood. I have a cool video with my buddy I shot. I was teaching him how to trade, and it was the first time I looked through the Robinhood app, and I think it's hilarious because it just says, if you think the stock is going to go up, buy a call. If you think it's going to go down, buy a put. And that is the biggest myth, and I want to show it because people, you know, the myth I'm going to show you today is that just because a stock goes up doesn't necessarily mean that the call goes up. And you guys need to understand that in various ways to become a profitable options trader. Avoid a lot of unnecessary heartache and losses that you could avoid just by understanding this simple concept. So I'm going to show you guys this play. It was a December 21st on Booking, and I got it for $330. And now what was so important about it was that I didn't buy it too long ago, probably like 20 minutes ago. But the thing about it was I got filled at 330. So getting filled at 330, I think we could see it here. Let's see. See, there's me right there at 330, and someone came in right after me and bought in at 380. I don't know if you guys could see that. Kind of bad, but, you know, I bought in, they came in after not too long ago. They paid more. I got to make money, but the thing is, even at $380, that option is still 24% cheaper than what it was going for the day before. If we pull up the price chart, you know, it was trading for a lot more money, and it's dropped since then. And even though the stock is up $42 or 2.5% today, the call is still down. So now, why did I get it so cheap, and what does this tell you? Well, one, this is what happens when you buy out of the money options. If, you know, it could gain value, and I'm buying this when 1985, I'm pretty much saying that Booking's going to move $180 in the next 21 days, roughly. And that's possible. It's very unlikely, though. You know, I'm probably going to make my money by it going up maybe $50, $100 in a couple days, and a couple weeks, if that happens. And I also am hedging another put play I'm up on, so that's why I bought this call. It's not that I think Booking is just a good buy right now. I'm already up on my puts. I've lost some profit on it today, but not too much. So I'm balancing it out now with this because good risk reward at both of these price levels. I'm up on my put. I could buy a call extremely cheap. That's what I'm going to want to do. But this thing is still down. And why was it down today after such an increase? It was way out of the money. You know, why is someone going to pay you money to buy the stock for more than it is? So that's where a lot of people mess up on, is the further are you from the money, even if you're correct on the move, the further you are away from the money, the less you're going to profit off of it. So if the stock goes up $43, but you're 40 spots away from the money, you're only going to make like $4 off of it. But if it goes up $40 and you're really close to the money, you're $2 away from the money, you're going to make a substantially large percentage. And that's where the people need to understand both that, and this is what I do now. You know, I bought this call, the stock is going up, it could still go up, and that's the thing. Option volatility and prices changes. So something may be cheap and expensive at one moment, or have a lot of volatility, or it doesn't have volatility, and that could change in an instant. So when I've said this before, people will say, okay, well, what do you mean mispriced contracts? This is kind of along those lines of what I'm looking for, is finding stuff cheaper and making deals and finding these deals on the market where I'm getting them at a cheaper price. So and, you know, still understanding what I'm buying and if that's a good play or not. But I'll leave it there. I think Jax is, I think he's bugging to go outside, so. What are you doing, dude? Are you just downstairs? That's weird. I think he's down there somewhere. I don't know if you guys, I don't want to drop my camera, but all right. Anyways, love you guys. Make sure you subscribe, drop a like. Hopefully you guys don't make this error when buying your calls and understand it's both an opportunity to find plays and also that just because a X event happens doesn't necessarily mean you're going to profit. So understand that so you could become extra profitable. Anything you want to say, Jax? Not peace, chill. All right, guys. Peace out.